You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mikey Hu. Hey, what's up, Moose? This is Mike from The Moose on the Loose. How are you doing today? So my question today, do you give second chances, or for how long a stock will be in the penalty box when you decided to get rid of it? I got that question in mind because I'm still getting regular questions about companies like Algonquin, AQN, or Salogist, SYZ, and then like investors are just like, yeah, what's going on with this one? Should I sell or should I keep up? And I also remember another member discussed that he held onto his shares of AltaGas, AltaGas. They made a major acquisition several years ago. It was a great company. Then after the acquisition, natural gas, they had to cut their dividend. It took a long while, but now it's getting back on track. So that member got his money back. He was happy, but he was at the same time thinking, well, maybe I spent too much time waiting on this one and I should have invested that money elsewhere. So it got me thinking, when I sell a stock in my portfolio, I rarely look back. I'm most of the time it's just that you're dead to me, I'm moving on, and there you go. So I don't want to second guess myself. It hurts my conviction as well, because once I've taken a decision, I think it's more important to stick to it and move on and follow strict investment rules. That just simplifies the way I think and the way I manage my portfolio. So I get rid of all the dilemma possibles. I focused on taking action and I just look forward. And when I have to look back, well, most of the time I did a good job. I got rid of Andrew Peller, Black Diamond Group, Hasbro. Even, I'm going to surprise you, but I once had Scotiabank in my portfolio. That was back in 2013 or 2014. And the reason why I sold it was actually I wanted to have international exposure. I realized that it was not working that well after 2 years, and then I just got rid of it at a profit and then moved on. And then some other times when I sell, I made a bad move. I did that with McDonald's a while back ago as well, and I should have kept it big time because this one was a keeper. But in both cases, I most of the time just ignore those stocks and never go back. But from time to time, someone will ask me a question or anything, and then if I go back to the stock price a graph, I just look at it and I'm like, oh my god, yes, that's what happened with this company. So I sell based on 3 simple rules. I like to keep things simple. So the first one is when my investment thesis is not backed with numbers, or that my investment thesis is just simply not true. So thinking that I have a company that will continue to grow by acquisition, like Andrew Peller, for example, they stopped doing that. Well, then my investment thesis, the reason why I wanted to have Andrew Peller, is not good anymore. So good riddance. I just move on and then it's over. The second reason why I sell is when there's a dividend cut. And this one, I'm pretty adamant about it. I made 2 exceptions in the past 14 years, and both of them were related to COVID. That was CAE and Disney, which I eventually had to sell both because they would not fit my investment thesis on top of that. But yeah, so if it wasn't for the COVID, I've always respected my. It's kind of the number one rule. If you're a dividend cutter, I sell and I never look back. And the last one is just to rebalance, so trimming some position. So going back to, do you give second chance? Well, if a stock has cut their dividend and I suffered from it, most of the I don't see myself giving second chances. I never did that in the past. I never get back into a stock that I once held, or if I did, I don't even remember. So it's probably a small position, or probably ever. And the reason is I like usually the dividend cut is one of the last resort or the last resort by management to try to make a big shift in on the balance sheet and liberate some financial flexibility. So when they get to that point, if you look at all dividend cutters, if you look at their like 6 months, 9 months, even a year before they cut the dividend, you can see that the market was already started to price it in as the stock price usually declined for a while, and then eventually you end up with the dividend cut. So if you sell upon the dividend cut, it's definitely not a strategy to avoid losses. It means that you're in the middle of the loss big time. You're getting close to the bottom, and then it's up to know like what's going to happen next. For myself, I just don't care. I just want to sell and I want to move on. So what happened is, in most cases, it's downhill after the dividend cut. There will be a few exceptions, like Sylogist that is coming back, or AltaGas that took like forever to come back, or even 3M. I sold 3M a while ago, so I didn't suffer from the dividend cut. But when it happened, now 3M is on fire and it's coming back from the dead. Quite surprising. But for those, I would call them anecdotes because there's not that many. You're going to find like a long list of companies like AT&T and AQN. And the reason is quite simple, and it's probably the reason why I don't give second chances, is once you get to that level of you must cut your dividend to keep the company alive, it means a lot of things were going wrong. So at this point, it's not that it's impossible that the company make a big shift and turn that around and become a thriving business once again. I guess it happens because National Bank cut their dividend in the 90s. Might as well. I was not an investor in the 90s. I was more interested in trading hockey cards than anything else back then. But interestingly, they cut their dividend in the 90s. It's not necessarily the same business model today. They are a bank, but National Bank is doing a lot more than just being a classic bank in Quebec. They probably look like a lot more like Laurentian Bank back then. So I would be willing to give Laurentian Bank a second chance? That's an interesting question. I would say for me to reconsider a dividend cutter, that company must show a very robust dividend triangle. So several years of revenue growth, earnings per share growth, and of course dividend growth. So not just like 1 or 2 years, but I'm thinking really like a full cycle of like 4 to 5 years minimum where I can see clear uptrend. So that would be the first things. So convince me by showing numbers first, and then the second thing would be, what's the new story? I would need a new story, a new investment thesis to convince me that this company is not just surfing on some like temporary tailwind or just like a new trend, and they are likely going to fail again once that trade fades, but more a very solid narrative. So if I had the chance to look at a company with a strong dividend triangle and a new narrative, well, then I might be interested in jumping in back again. It didn't happen so far. When I look at the company that I left back, especially those dividend cutters, none of them showed something interesting. There are a lot of companies like McDonald's that I sold that was not because of a dividend cut. So those maybe I could go back in, especially like McDonald's. That was just a mistake. I was younger and couldn't figure it out. And I just thought that the company had a problem like generating more growth, but they eventually found ways. Companies like Hasbro, for example, had put a pause on their dividend growth rate. So that was not a dividend cut, but I would need a lot more of the dividend triangle and a very strong thesis to convince me to go back in. For a company like Disney, maybe this one could be a possibility, but at this point, they need to show that streaming is actually not just profitable, but highly profitable, showing back that they are able to put in a lot of blockbusters for movies. And finally, attract a lot of customers into their theme parks. So I don't know if they will be able to put all of those conditions together, and that would take years before I get second chance. So, anyways, I'm curious about this one. I'm not like black or white on this one. I'm not sure if I should give second chances or not. Just go on the YouTube channel, The Dividend Guy. You can find this podcast and hit the comment section. I'm curious to see if you are giving second chances once you sell a loser. Are you getting back at one point, or you're just like me and once you sell, you move on and you don't talk about that? So go on the YouTube channel, the Dividend Guy on YouTube, and we're going to talk about this. Tomorrow we're going to have another show, and until then, don't forget to stay invested.
Hey, welcome to the disclaimer. If you're listening to The Moose and the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy this show and do your due diligence after it.